VP at Bullish Capital. When I first joined Bullish, it was still Block 1. This was before the exchange was born. And it was more of a whiteboard kind of concept. We had an IPO last year towards August on NYSE. Not often do you ever work for a company that's gone from startup mode to being listed on the New York Stock Exchange. So that was a huge moment, I think, for everyone in the group.
How do you think, working in TradFi shaped the way you invest right now?
The main thing I've taken from TradFi is a pinch of skepticism. Founders' background matters a lot too. They can lead a team and understand that by taking someone's check, you're not just spending it at tables in a club.
With Bullish Capital, you guys sit on top of an exchange. What benefits does that have for you as well as for the projects that you invest in? Do you get access to data? Are you able to make investment decisions? Or do you think it gives you any kind of edge?
The exchange side operates as its own business. We don't get any insight to data or anything like that. We do leverage CoinDesk side quite a bit for our portcos.
Speaking of CoinDesk, I don't think a lot of people know this, but Bullish owns CoinDesk. It's really interesting because you guys have like a form of liquidity, form of investment, media. So you kind of really leverage a lot of different parts of crypto. Are you a Hayek believer in life as well?
I would say I adopt a libertarian mindset, and I think free markets is important. But yeah, I think Hayek's ideas have translated through to crypto, and his belief of money being a decree is kind of pillar to this crypto cypherpunk mentality.
I think especially in times like this, when there's so much uncertainty in the world, like Hayek's principles really kind of hold up, at least for me, and that's why I'm in crypto.
I'm Sylvia, VP at Bullish Capital, the venture arm of Bullish Group. We look at Series A investments on the venture arm, 5 to 10 million kind of check sizes. We've done quite a few investments across, well, we're sector agnostic. We've done EtherFi, Babylon. We've also recently, there's Wingbits, a DeepIn project that we've also invested in. And yeah, I mean, always happy to connect to founders, always happy to connect to builders in the space, and anyone that's looking to provide real utility to blockchain and crypto. How I got started in crypto was actually, it's quite a long time ago now, probably about 10 years. So in 2016, a friend of mine, we're in Sydney, and he was building on Ethereum. So he was one of the very, very early people that ever talked about Ethereum. And we were playing board games, Settlers of Catan one night. After the one game, he pulled down his projector and he started putting on a presentation about Ethereum and blockchain and keeping your own keys and how to have a recovery word phrase, etc. What a cold wallet was. So he went through all this explanation. It was about a 2-hour presentation that we didn't know we signed on. And our group of friends basically were like, what is this Ethereum that you're talking about? I don't understand anything about blockchain. We've never heard of anything other than Bitcoin by that stage. I think it was a very in-depth introduction, but we didn't really think much of it. And then 6 months later, he asked me, did you end up buying it? Did you look at it? And I was like, no. And then he showed me the chart of Ethereum, and I was like, okay, maybe I should have been paying attention at it. So yeah, that was the first kind of exposure I had to crypto. The jump from TradFi to crypto started about 5 years ago now. So before crypto, I was in buy side in TradFi, working for an active fund in Sydney at the time called Alan Gray. Great fund, contrarian kind of investments. And I moved up to Hong Kong with a firm called Moraine Asset. At the time, it was a challenging period for buy side because active managers were seeing less and less of a moat. They were outperforming passive investments less and less. So over a 5-year time horizon, I think majority of active managers actually underperform. So with that said, I was kind of at my desk and thinking, what's the longevity of this industry and how relevant are active management and active managers going to be in the next 5 to 10 years? The answer was not very. So 5 years ago, I thought, what is a thriving industry and what's going to be the next big thing? Tech at the time, so SaaS products were huge. You saw the upcomings of like Atlassians of likes, Canva, etc. So lots of tech innovation coming out, but there wasn't. It was kind of a more difficult transition to make from TradFi straight into tech. And I think a nice bridge to that was crypto, because it was still within financial services and you're still looking at very similar primitives, but it wasn't that big of a leap, which is why I moved over. So, yeah.
And this was in 2021, right?
Yes, that's right. Yeah, 2021. It's about 5 years now.
Wow. So what was that like? First you moved from Sydney to Hong Kong, and then you're in Hong Kong, and this is 2020, 2021, which was obviously a very difficult time for Hong Kong as well, because obviously there were political issues, but also COVID. And then, 2021 was also crypto's historic bull run. So what was that experience, combined like for you?
Yeah, I mean, I actually joined the industry in a bear market.
Okay.
So it was
Yeah.
tough timing, but it was kind of good to see it in a bear market and then see the booms and busts of the cycle, because you don't really get short cycles like that in TradFi. Boom and bust cycles last 5-10 years in TradFi, and it's a lot harder to see in a condensed form. So being able to see it in a bear market when I first started, and then actually a huge bull run with DeFi summer coming, and from there it was just booms and busts coming and going every year actually. And I think for Hong Kong it was an interesting time, because Hong Kong actually, I don't think many people know, but a lot of the major exchanges started out of Hong Kong. So Binance, there's BitMEX, OKX is also here, but the kind of talent drain that Hong Kong had over that period was quite interesting, because rather than keeping the talent in Hong Kong, a lot of that kind of bled out of the city, and people were setting up entities in the US. They were moving over to the Middle East, where licenses or jurisdictions were more favorable. So I think that was a huge loss for Hong Kong. Part of that, it was regulatory clarity and being able to actually operate in the jurisdiction without being in a grey zone, which was hard for a lot of people. I think Hong Kong is a great city, and it's very livable. It's amazing. It's got a lot of things to offer, lifestyle-wise as well as opportunity-wise. So I'm kind of interested to see the next cycle of that evolution, and see if we actually bring talent back onshore, and if we can actually start seeing more innovative kind of projects coming about because of a talent boom.
No, I relate because I was part of the talent drain in Hong Kong. 2022 is when I left and moved to Singapore, where I think there was like a mass exodus to Singapore. from Hong Kong as well around that time. So yeah, I think it would be, and obviously I'm very attached to Hong Kong in general because I spent so much time there. But I think for me, it would be very interesting to see as well how Hong Kong kind of rebounds. Because I feel like historically it's always rebounded after having, problems. So it'd just be interesting to see how that goes. But yeah, sorry, go on.
Yeah, definitely. Hong Kong's a very resilient city, and the people here are among some of the most hardworking in the world. Yeah, they have like a certain grit and tenacity about them. I think this back.
Yeah, definitely. And so from there, when you joined Bullish, what was your mindset like, and how did you get introduced to the team there? And what was your role when you started? And now how is that?
Yeah, so when I first joined Bullish, it was still Block One. This was before the exchange was born, and it was a more of a concept, a whiteboard kind of concept. When we first launched the exchange, it was a hybrid order book at the time, so an AMM cross club central limit order book model was quite innovative for that period. That was like 5 years ago now. So watching the company mature from like a whiteboard status to the evolution of what it's become has been mind blowing. I think it's been really rewarding also to be part of that journey. And then we had an IPO last year towards August on NYSE, so that was a huge milestone for the group. And from inception to now, I think we've all come a long way. And seeing all our colleagues really bear the fruits of hard labor is also, yeah, very, very rewarding to see.
What was that like for you, when you guys got listed? Because it's a huge achievement to be listed. Were you there for that kind of moment
Yeah,
in New York or?
yeah, definitely. Yeah, I was there, fortunately, to be included in that, and I think it's lots of photos, lots of hype, lots of happy employees. I guess I think the main thing was it's a very unique experience because not often do you ever work for a company that's gone from startup mode to being listed on the New York Stock Exchange. So that was a huge moment, I think, for everyone in the group.
Yeah, I can imagine. Especially in crypto, I think there's barely any companies that have really made it out of the crypto kind of bubble into like the realms of real traditional finance. And
Yeah,
yeah,
yeah.
so you started in kind of TradFi and then moved to crypto, but both as an investor. How do you think, working in TradFi shaped your the way you invest right now?
Yeah, I think the main thing I've taken from TradFi is a pinch of skepticism. So when I worked for the first firm called Alan Gray, they're contrarian investors, and the portfolio manager there had a very unique style of investing and a way of looking at things, which was through um, a lot of due diligence for one, and two, a lot of skepticism of every single stock. So that is important to a degree in an industry like crypto because you do get a lot of noise. And if you're looking at a basket or a universe of investable projects, to have to funnel that down and making sure that funnel process, you in that during that process you don't filter out any prospects that could be that next 10 100x is really important. But also it's hard to remain a skeptic and then also excited about a project, if and that finding that balance is, I think, vital as an investor, and certainly as a VC, you need to have a certain level of due diligence, but also conviction.
Yeah, absolutely. And for you personally, when you're evaluating companies or projects or even founders, what are some things that you look for when, say, there's like a deal that comes on your desk?
Yeah, so when we come across decks and deals, we tend to look for a common theme, which is how it is there a PMF? So is there product market fit for this product? And with the project, quite often in crypto, there's lots of great proof of concepts, but the founders might not have really thought through things like go to market. They haven't thought through things of, you know, really basic journeys that founders need to go through, which is, if you're a first time founder, which quite a lot of the decks that we get and see are, you don't really come through these obstacles until you hit them. So, it's great that you want to build the world's best crypto wallet, but if you're not figuring out your distribution channels, or how you're like, you don't have infinite money to spend on marketing. So have you thought about like what partnerships you're going to prioritize for that? So those are kind of some tangible examples. But what we really do want to see is something novel in a way that can be useful and have real utility within crypto and on the blockchain. But that's something that the industry tends to forget. They they don't have. I mean, utility tokens as a whole. There's not much product market fit for, and to actually build a project that has that PMF is far from many. So I think that's one that we look at. Also, I guess founder's background matters a lot too. So being able to show that this founder has had previous experience, that they can lead a team and understand that by taking someone's check, you're not just spending it at on tables in a club per se. That's definitely some red flags that you can see in an industry like crypto.
No, for sure. I actually started my career as a VC, but it was a traditional Web 2 VC fund. So we were doing pre-seed and seed as well, but I remember even at that stage, it was like PMF was so important to look at. But in crypto, it's like an afterthought, because, which I also partly understand, because people pivot so much. But I think in general, the way Web 2 is, it's you need to find at least be a little bit like revenue generating, have something substantial before you go out and raise from VCs. When crypto is just purely on white paper and
Yeah,
yeah.
proof of concept or so. But yeah, I think like generally by the Series A stage, which is when we start looking at these projects, they do need to show that they can make money. So revenue is a huge, huge point. And a lot of these crypto projects, you don't really see that many actually producing real revenue. And I'm talking about big chains as well. So many layer ones now. And VCs have been, for the longest time, have been spraying money in and injecting so much capital in infrastructure and L1s, etc., scaling. But the real layer that the industry should be focusing on is applications and how to drive more adoption in the sector, plus what when new entrants come in, like how are you capturing that distribution channel and how are you going to actually make money from them?
Absolutely. So for you with Bullish Capital, you guys sit on top of an exchange. What benefits does that have for you as well as for the projects that you invest in? Do you get access to data? Do you get access to some kind of like user behavior before you're able to make investment decisions? Or do you think it gives you any kind of edge?
I think the edge really comes from being able to invest in what we think will make money, and what the mandate itself doesn't restrict us in the sense that it doesn't have to actually be related to the exchange at all. So we're free from that. The exchange side operates as its own business. We don't get any insider data or anything like that. It's completely separate on that side of things. And we independently assess projects as they come through as an individual rather than whether or not it makes sense for the group. We do leverage our CoinDesk site quite a bit for our portcos, so we're able to kind of give as much support as possible from an intention point of view in terms of being able to put them on stage at Consensus, being able to give them exposure there, really understanding the product that they're building, the project itself, and then sometimes I author for CoinDesk, so being able to explain why we think that this is an important piece for the industry. That's generally how we fit in within the group. But of course, like on the exchange side, if there's anything that makes sense, we will also look at that. So we're sector agnostic is probably the.
Got it. Yeah, actually, speaking of CoinDesk, I don't think a lot of people know this, but Bullish owns CoinDesk, which even I didn't know for the longest time. And I think it's really interesting because you guys have like a form of liquidity, form of investment, media. So you kind of really leverage a lot of different parts of crypto almost.
Yeah,
And
yeah,
yeah,
definitely. It's
and
a position.
yeah, no, for sure. I don't think there's a lot of even exchanges, purely exchange businesses that are able to have this kind of a reach that you guys are able to have because of these different segments that you own.
Yeah, yeah, definitely. I
And
think the resources that we pour into our portfolio companies is quite abundant, and we help from anything from within our group's assets to even externally outside. Whatever they need, we will always try and provide for them. So if it's introductions, if it's helping them with their GTM strategy, to speaking to other exchanges, yeah, that's definitely something that we always try and give as much as we can to them.
and is it quite similar, say compared to Coinbase Ventures, where a lot of projects that Coinbase Ventures invests in eventually get listed on Coinbase? Is it very similar for you guys, where a lot of projects that you would potentially invest in get listed on just?
I mean, it's not necessarily per se. I think the listing component really depends on the clients of the exchange. So if there is a huge demand coming through for a certain token and a certain asset to be listed, then the exchange is going to consider that. And separately, they also have a liquidity as a service deal that is open to lots of different other projects outside of our own portcos. So that's also another option for any kind of project looking at which.
Interesting. How does that work actually? Like, what is liquidity as a service?
So the liquidity as a service, the way the exchange works is it's an AMM and CLOB together. And the Bullish Treasury is the one that kind of puts in capital to support these AMMs. If there's a project that looks to kind of want to think about enhancing liquidity and having even externality effects to overfill to outside of Bullish in other exchanges. We've also seen that happen too. And they're able to kind of list the token pair and say a stable coin pair like USDT or USDC or whichever other pair they want to make in the pool. And then Bullish Treasury will help support that. And from there, they're able to enhance not just the depth of liquidity in the pools, but also kind of have that benefit. We see like a lot of arb opportunities, etc., coming on from different market makers as well as other traders. So they will probably take that liquidity and put that elsewhere. And the markets are efficient. There will always something that happens on one exchange will always have some kind of effect on other exchanges in terms of liquidity provisions. So that's like an externality that kind of overflows to the.
And so, what do you think, like, what kind of companies are best positioned to actually benefit from the ecosystem that you guys have?
So I think there's a range of projects that would benefit. It's more so what stage they're at. So if they're a very early kind of project or company, I would say that it's still worth us speaking to and then following their journey and seeing how they track. And then when they're ready for that Series A stage, that's when we come in with a larger capital injection. So our sweet spot is $5 to $10 million, but it's, I mean, we rarely like veer away from that, but it's still possible. So that's when we can come in and support with that extra bit of capital. Whether or not they're trying to grow their marketing efforts for GTM or whether or not they've already reached an inflection point where they've onboarded the most amount of customers that they can for the amount of capital that they've invested, and they need that extra bit of capital to get them to that market leader.
Gotcha. No, super fascinating. And then I know in the past you also used to do a lot of research reports, and I saw the one that you did recently for Nvidia GTC. I'd love to learn a little bit more about what that was like when you were there, and what are some things that you're personally bullish on right now?
Yeah, I think Nvidia GTC was very eye-opening. It was similar and also very different to crypto conferences at the same time. We we mainly wanted to stay in front of AI and all the innovations that are coming out and happening within the sector. GTC, I would say, even up till day 3, there was still lots and lots of people in the venue, whereas typically a lot of crypto conferences, people turn up for day 1, maybe start to dissipate in day 2 and 3. But there was huge crowds, and the kind of innovation that's happening across not just telcos, utility, financial services, but also even healthcare is insane. It's kind of gotten to a point where it's so hard to keep up because there's so much happening and so much growth going on that you kind of need to hammer into one pillar and then be specialized or focused in that. From GTC, what we saw was, in telcos, for an example, there's companies leveraging their existing infrastructure to do robo delivery services within zoned areas. And that's very innovative in the sense that Uber Eats or Deliveroo, these kind of food delivery services, has been out for some time now, and there hasn't really been any major disruption to them. But robo delivery services is quite an interesting category that we did see there. That's something to follow. I think also outside of telcos, there's healthcare, there's a pharmaceutical company that have been investing a load in R&D and being able to figure out how to use existing operating room images and data, and then linking that into synthesized images and coming up with a simulation pattern for surgeons to practice removing stones in when there's a rupture. And these kind of simulated environments is really important because if a surgeon has 10 years of experience, there's certain medical cases that, because everyone's human body is different, there's so many different cases that you might run into that you have never seen before. And being able to have synthesized data to simulate these scenarios is really, really fascinating. And I think that in itself is going to help progress the healthcare industry forward. But yeah, and Nvidia GTC was very, very eye-opening. I think if people are not looking at AI, I think that's a huge, huge miss.
No, definitely. I think personally for me as well, in the last 3 years, I worked with a lot of AI projects. So I worked with Aether and then also worked with Kite AI, which was working on agentic payments and working with PayPal and using PYUSD for stablecoin settlements. And but it's been really interesting personally for me as well to explore AI just because I've seen the capability of what's possible. And how, sometimes I would talk to my normie friends or talk to my parents, and this is probably the first thing or the first time that they understand how crypto could be relevant or really relevant.
Yeah, yeah. The AI agentic payment space is definitely something interesting. I wrote an article about this a few months ago actually on how Hayek and so F.A. Hayek, a famous Austrian economist, and AI and crypto intersects with it, which is mainly around who the end user of a new kind of monetary system would be, and that would be probably AI and agentic payments in the form of micro.
Yeah, it makes sense. Are you a Hayek believer in life as well?
I would say I adopt a libertarian mindset, and I think free markets is um, is important. But yeah, I think Hayek's ideas have translated through to crypto, and his belief of money being a decree is kind of pillar to this crypto cypherpunk mentality of being able to have like a decentralized currency that is not controlled by the government and not inflated away, but also chosen by the people. It's in a way a sandbox environment of crypto just spinning out all these different tokens and trying to test which one is that value of exchange. And the value of exchange might not even take form in one currency per se. It might take form in many different ones. And it comes down to which one is supported by the masses.
No, for sure. I think especially in times like this, when there's so much uncertainty in the world, like Hayek's principles really kind of hold up, at least for me, and that's why I'm in crypto. So,
Yeah.
yeah. And the last question that I have for you is, what are some things that you're excited about in 2026, 2027? Some areas of crypto that you're looking to invest in. What's that looking like for you?
Yeah, I think to hit the hammer on the head, the agentic payments space is really interesting. We've yet to really find something that ticks the boxes of what we're looking for. I really think that the project that's going to win is the project that has huge mass distribution already and that is going to be able to seamlessly onboard the next generation of AI agents that are already transacting through micropayments seamlessly and not forced. Because the thing is, you can create a project and then try and incentivize agents or people to use it, but then at the end of the day, when the incentives run out, are they still sticky? Are they still using the platform, or were they only there for the incentives? And you really want to find the product market fit where AI agents are transacting with each other and using micro forms of micropayments because they need to, and that they are there because the platform is actually useful to them, rather than being drawn by monetary incentives that are short lived and that aren't going to outlast these boom and bust cycles. But yeah, so I think going back to 2026, that's what we're trying to focus on. And for 2027, I think that's still a fair way, but it would be it'd be interesting to see how AI shapes crypto going forward, because what we're seeing with the advancements of models like Claude, they just keep shipping and shipping. And with every single update, it's rendering so many projects useless because we might come across an interesting project and think, okay, there's the right problem they're solving for here. And then the next month, Claude releases an update that just renders their moat useless. AI is shipping at a rate that is just unbelievable. And these models are evolving so rapidly that if you're a founder, you have to start thinking of how am I going to create a project and solve for a problem that won't be rendered useless by the time Claude or Gemini launches.
Yeah, no, I think the rate at which it's moving is like scary fast, but also very exciting at the same time. But yeah, I think those were all the questions that I had. Thank you so much for joining the podcast. It was great to have you on today.
Thank you. Thank you so much for having me, Tanya. It's been a pleasure.
Thank you for listening to Off the Record. If you like this episode, like, subscribe, and leave a review. It helps the podcast grow. You can find more episodes wherever you get your podcasts. See you next time.